Hello everyone, welcome to the channel. Yesterday our discussion was simple. We wanted a closure above this and then on pullback we will enter call, and we wanted a closure below this. On pullback we'll enter put. This is what I had clearly mentioned. Market again was completely sideways. There was no one-sided movement even today. Whenever market opens pretty big gap up, we know that the last indecision candle will act as our demand, right? So just doing a bar replay for you here. This is where market had closed yesterday, right? So the last candle will obviously act as your demand. If market opens pretty big gap up, whole range will act as your demand. Market opened gap up and market started to come down, and the moment market came here and tapped into your demand, I'll just draw you the structure. What does the structure tell us? Market came down, did a small retracement, and broke your lowest swing point, and tapped into your demand, and we get a closure above this lower high. So what will happen whenever we have this kind of a pattern? We will look for a pullback before entering longs, right? This is always our pattern when it comes to confirmation. This is how we generally trade. I have always time and time again I have told you, whenever we get patterns like this, we can look for a long position. So this demand will become invalid, so the effective demand would be somewhere around here, right? This is an indecision candle which was formed, and there is a supply also to be noted. Understand that there is this particular small supply which broke this structure, right? So our ideal trade plan will become two kind of trades. One is if market comes here, we can plan for a long. Other is if we get a negative reaction from here, we can plan for puts. This is very small trading range. If you see here, it is 25,975 to 25,938. Now hard to hard 35 points. I was not at all interested in this because the risk to reward was not good. But how could we have planned in our trades is something which I am trying to explain you, so that you can understand SMC concepts much better. Market tapped into this supply, gave a negative reaction. What is the negative reaction which I am talking about? Is market has to tap into our supply, break this lowest point, and then on a pullback we can plan for a short. Exact opposite to what we have planned and discussed here. This is the exact opposite what I'm talking about here. So the structure clearly says that market went up, came down, did a small high, came down and broke the structure. So the moment we get a retracement, we can plan for a short. This is what effectively would be our trading position. We could have planned a short position here, keeping this as our SL and this as our target. What is the risk to reward here? It is not even 2. This is the reason I told I was not interested, because eventually the target will be hit. I'm not saying that target would not be hit. Target would definitely be hit. Again, when you come back here, we can plan another long position. But why do you have to trade in such kind of a sideways range bound market? It is not necessary at all. So it is better to wait for a proper closure in one of these directions. This is how we generally plan our trades, right? So moving forward, the trade plan for tomorrow also will remain the same. I am just making this video so that there was not much of a movement in market today. It was completely sideways, but still we could have planned a trade and we could have executed a trade in case if we knew the market structures, if we know the supply and demand and all. 4 hours chart, it is very obvious that there are equal lows being formed. There is a gap which needs to be filled. So all these will act as a movement to the downward direction. So the effective trade plan for tomorrow will be very simple. We need a closure below this. On small pullback, we can plan our short trade, meaning the moment we get market below this point, below this swing point, then on pullback we can look for shorts. Targets will be very big in shorts, because if you see back again in 4 hours, there is no demand which the market can react from. This demand is efficient. This swing point is also from a no man's land, and this is the effective way market will move. And if Sensex supports this move, Nifty also will move very drastically. This is the reason I'm saying you should not think like, okay, market is going to go move up very big fashion, we will put all the money. No, that is not going to be the plan. We will make sure that the lot size is small so that we can capture a big move. We can easily capture this 200 points move if our lot size is small. If our lot size is big, we will be hurrying into closing our profits the moment we see a decent amount of profit. On the upside, I'm not very much interested. The reason I'm saying is, although we can plan a trade on the upward direction, there are innumerable number of resistances. If I slide back to this, there is a resistance here, there is a resistance here, there is a resistance here at 26, meaning at every point, meaning 26,050 there is a resistance, 26,130 there is a resistance, and there are relative equal highs being formed here. This can act as a liquidity and a resistance again, because there is no particular supply, right? So market can react from anywhere from the upward direction. But the moment we get closures above this point, we can try a call position with a very small quantity. Keeping the video short, if you like the analysis, make sure to like the video and subscribe the channel for more such educational content.